Is it too late to get into a staple stock like this, which has already been outperforming so much?
I would not buy it here. You might get a little more upside because there's still a need to be in quality and in stability like this. And I think the stock will continue. I wouldn't sell it. I would hold it because it does have a dividend. They do have a great history in terms of product innovation. They've got great scale. And they should continue to do well. And even despite the pantry stuffing that's been going on, is primarily a U.S. phenomenon, apparently. But I would hold the stock here. You might get a little more upside just because there's continued cash still looking for a place to be. And there's still such uncertainty in terms of the length of this economic uncertainty that I think a name like this will still attract cash.
We should mention, by the way, we just hit session highs for all of the indices. The Dow touched over 700 points higher. It's 680 points higher as we stand, basically 3% higher on the day. S&P's are about 2.7% higher. We've got 7 minutes left of the session. Earnings season has officially kicked off, of course, in this past week, and corporations have found themselves in uncharted territory. The majority of companies reporting results have withdrawn guidance amid economic uncertainty. Kansas City Southern, one such company, reporting a beat on earnings and revenue, but withdrawing guidance. CEO Patrick Ossensmeyer citing CNBC's own Jim Cramer in explaining the decision.
We are pulling back on most of our guidance that we had previously given. I think the best advice I've heard recently, as we've all been probably watching more CNBC, is from Jim Cramer, who said you would have to be an idiot to give guidance in this market. So we're not idiots, and we're going to put the guidance on the shelf for the most part.
Good to hear that everyone's watching more CNBC, including CEOs like him. I guess this came through as well on the bank's earnings that have all been reporting this week. Morgan Stanley CEO James Gorman saying it most explicitly, saying we definitely won't hit our original guidance. No one should expect that. Does that worry you, though, Barbara, when you hear company management saying that, or is it in fact a sign that everyone's taking things fairly seriously and being quite sensible?
Yeah, I think it is being sensible because really right now we should be looking through all the negative earnings, all the negative economic news, because we know it's going to be deep, it's going to be severe, but it's going to be temporary. We still don't know the pace as we come out of it. But I think what we need to look for in a name like KSU is really they're part of an industry that has really gotten themselves much more structurally sound. I mean, they've outperformed the S&P 16 of the last 17 years. And the reason is because they've really rationalized their operating costs. Kansas City, they're not giving guidance on their revenues or earnings, but they are saying we think we can meet our cost-cutting targets of some 60 million plus. And that's what, to me, we'll have to watch for. And that's because they've been doing things like fewer trains, but longer trains, more weight, all this sort of thing. They've talked about their balance sheet. They expect to still have $500 million in free cash flow. Their leverage is good. So, you just have to, I think this is really a function of macro forces of the economy, and we just have to wait this out. And at some point, it may not be till mid or end of next year, but this will resume. And so I think it's very wise not to give guidance because how do you know right now?